Tell me about a deal you followed. A classic investment banking interview question and a classic trap that investment banking interviewers lay down on the candidate. Now imagine this, you are in the room, you've not worked on a single deal yet, you are a fresher, but the interviewer asks, tell me about a deal you followed. Now most candidates freeze, some simply bluff something, few candidates actually give good answers. But the actual truth behind this question is that you don't need to work on a deal to explain one. You need to think like an analyst. Let's try to understand what exactly are they trying to test behind asking this question. In reality, this is not about experience. It is about the mindset. They're not asking you if you've sat in on board calls. They're asking if you understand how deals work. Can you simplify a real transaction? Can you connect the numbers with a narrative? Can you sound like someone who belongs in this business? This is what this question is actually testing. Get that point first in your mind. And how do we tackle that? Simple. Here is a simple, repeatable structure. Four parts, and it works every time. No matter which deal you are picking up to analyze, in which geography, irrespective, always look at these four areas of information while analyzing that deal. Number one, the basics. Who bought what? Who was the acquirer? Who was the target? Get the names in place. When did the transaction take place? How much was the deal value? Yeah. Next is the numbers. Look at the key metrics of both the target and the buyer. Size parameters like revenue, EBITDA, the deal size, valuation multiples like EV EBITDA multiples or EV EBIT multiples, whatever is available which is relevant for that sector, for that particular target and the buyer. Note that. Keep them in mind. Next, the logic. What was the rationale behind this deal? What was the sense behind it? How did it help the acquirer? Was it feasible for the target to give up the company or a stake? Analyze that. And this is where your value addition comes into the picture as to what you think about this deal, whether it made sense or whether it eventually ended up eroding the investor's money. Add your thought process. Yeah. Getting into the details, start with the basics. Simple basics like the buyer, the seller, the deal size, the date. And if you know these things at your fingertips, it tells me that you're not simply throwing the names around. You followed the transaction with an intention of having a serious approach towards understanding how deals work in investment banking. You're looking at what actually happened. And my friends, this is the first sign of seriousness, that you tell your interview that, look, I am pretty serious about investment banking, and that helps you build your credibility in front of the interviewers, which is very important. Yeah. Next, add the right numbers. Quote the metrics you can defend. Anyone can say EV EBITDA was 14 times, but can you explain why that matters? If you simply mention revenue, EBITDA, deal value, or valuation multiples, be prepared to explain them. You will be asked questions. You will be asked to justify the rationale behind the multiple that was paid by the acquirer. Was it overpriced? Was it underpriced? In relation to the market or relative to the industry in which they are operating? And this is where you don't have to commit to your memory. You have to understand the logic, and that will eventually help you shape an answer or give an answer that is right for that situation. Next, explain the deal logic. What problem did it solve? What was the value that it helped the acquirer to unlock in the future? Don't just say that it was a strategic acquisition. Go ahead and elaborate. A simple answer like, the buyer was, let's say the buyer was losing ground in an EV market, for example. This acquisition gave them an immediate manufacturing capacity, and also gave them an access to the local brand, which instantly gave them some local markets. Yeah, you don't need an insider access for all this. You don't need private information about a deal. A simple common sense, simple reading around the deal, and a little bit of logical thinking and curiosity will help you shape an answer on this. Yeah. Next, very important, add your commentary. Think like an analyst, not a news anchor. You're not simply reciting a news story to someone out there. You're going there as a potential analyst. And this is where you stand out. Say what you really think. Was the price justified? Were the synergy targets realistic? Were there any risk that you could have flagged? How did the market react to this? A holistic understanding of the deal can be can be taken out if you address these areas properly in your answer. And this is how you shift from a passive observer to a potential analyst. This is what interviewers look for. Yeah. Next is public deals that you can practice with. It's not a Pandora's box. It's not some hidden truth which is buried deep down in some ocean. It's these are deals which are lying all around you. The information is lying everywhere around you, and you don't, again, as I said, you don't have to look into some internal information memorandums or some confidential sources. You just need to pick few deals where there is data out there, as simple as that. And there are some of the interesting deals like Adani Ambuja Siemens ACC consolidation. That was a massive bet. Then you have deals like JSW stake in MG Motors, Disney Hotstar, the Tata's semiconductor course, the Nvidia's acquisition, failed ARM acquisition. These are some deals out there which cover different aspects, different strategies that the acquirer has deployed, and that too in different sectors. Read these deals according to the framework I just showed you. Alongside this, read the investor presentations, listen to the earnings calls. All these deals are by some reputed acquirer, and typically whenever such deals take place, there is a conference call, there is an investor call which highlight the nuances of the deal. A very interesting document, very interesting piece of recording. If you get an access to, listen to that. Yeah, and track commentary from both the sides. Yeah, this gives you a lot of insights about the actual deal making. Now, the important question is where to find the right data. So, this is where you're supposed to be source conscious. You have to build the trust. A simple idea is that go for credible sources, avoid blogs and social media summaries. Instead, use the company's investor relation pages. Yeah, there are there are authorities like SEBI, BSE, SEC. They put up the filings. Refer to those. Refer to the earning call transcripts. Refer to some reputed news sources. And there are a lot of screeners as well, a lot of databases as well, reputed ones. Use them to find out the information. They do have credible information, and it will eventually the shape and the quality of your answer. Yeah. Next, the last thing is you have to internalize the understanding and not simply memorize. You know, a good walkthrough is not a script, it's actually a thought process. When you speak, the interviewer should feel the person did not just read about a deal, they've actually understood it. That is the one who actually gets the offer. These are the guys who are actually getting the offer and bagging the offer. They've convinced the interviewer that yes, we think like the analysts, and which is why we deserve a spot in your team. Yeah. So yeah, if you've liked this way of learning, this is how I teach every week inside Visinius investment banking program. It is a live applied learning environment where we go well beyond theory and focus on how to think, communicate, and operate like a banker. If that sounds like the kind of learning you need, you can check the link in the description or simply reach out to me. This is Pratik signing off. Thank you.